them numbers, we running up on neighbors. We don't got no good karma left. We running out of favors, yeah. Dabs and hugs don't pay the rent. Never seen an angel sent to the side of town I live, so I read while they repair. My role models were finesses. Papa cut pills in the dresser, gave me 40 and I flipped them. I ain't even feel the pressure. Never learned to press a shirt, never learned to tie a tie. Cause I seen my parents' checks and I seen they tired eyes. If we could've paid for college, hell, I might have been a lawyer, but that probably wouldn't work. I'm too motherfucking loyal. I've got too many people counting on me, on me, on me, on me. So it's go time, crunch time, night time, sleep time, wait time, work time, no time, make time. Luck is just something that you make. If they don't want to give, you take. Go time, crunch time, night time, sleep time, wait time, work time, no time, make time. Luck is just something that you make. If they don't want to give, you take.
I am not proud of where I've been, but I'm proud of where I came from. Drowning in a drink, going brain dumb. Waking up with strangers, don't know where they came from. Turned my life around and I started building kingdoms. All I do is work now, funny how it works out. Ain't no time to take her on a date, don't have a girl now. I guess that's the trade-off, guess I had to fade off to finally find the time to figure out what I was made of. Ay, give me space, love, I got shit to prove. I don't do this for no pay stub. I know that you hate the way it separates us, but success is something I need me a taste of. So it's
go time, crunch time.
Yeah, I've had a lot on my mind, I've had a lot on my chest. I wear my heart on my sleeve, I wear my heart like a vest. Work every day of the week, they told me I needed some rest. Want them to mention my name, whenever they mention the best. Damn, it feels so good to be back. The one and only, had to take a step back so I could learn and adapt. I'm calling Dan, calling John and then Matt to tell them all to put their bets on me with every set that they have. You hear that detail in that instrumental, spill out my whole entire soul for me, that's fundamental. We put in work, that's why we're here, it was never accidental. It's time to see what we can find inside my fucking mental. Welcome back.
Hello, people. Happy Thursday evening. Have we all recovered? Have we all settled down from the craziness, the market meltdown of the century? I'm not gonna lie, this is like one of the most... I can't explain the overwhelming happiness to come so far in life. Alright, last time something like this happened was the coronavirus crash. And I didn't have a short. Or at least one that was directly supposed to be short. I had a funding short, but it wasn't anything special. So, this time around, to come out on top, be in the correct trade when the correct thing happens, and benefit from the fruits of my labor. Great feeling. Great feeling. So, I've gone against my my initial thoughts. I said before that I was going to continue holding the shorts, regardless of if we see any sort of bounce. Now, I didn't take this profit off the table just because we bounced. All right, it was a cross between a couple different things. One, starting to transfer my margin over to inverse perpetual. So obviously, in order to do so, I need to take profit in order to free up the margin and the profit that's associated with it. As well as that, I really didn't think we were going to be down this far. So, like I said before, the efficiency past 50% of price action when you're in the short starts to lose its efficacy as time goes on. So once we started to get close to that 400%, 500% mark on most of the trades, I started shutting them down, freeing up that margin. And now we are chilling pretty much in inverse perpetual across the board. Let me bring up the account here. So I got about $3,658 in BTC, about $800 in USDT, and $400 in Ethereum. My charts were kind of all over the place last night, so I didn't see that Ethereum hit 1700. That was one of my DCA points I really wanted to get into. So I was looking to transfer probably about another $300 out to Ethereum when that happened, but I just unfortunately was... I'm not gonna lie, we stayed up until like 7 a.m. in the Discord last night, so I was tired. Didn't really... And just the excitement overall. I was looking around different places. As well as that, I picked up about $700 worth of KDA at $4. Well, not $4, $1.40. Now, I put about $350 in at $1.90, and then I put $350 in at about $1.60. So as long as we were relatively close to that local low, I was willing to put money in. I will sign into that account later, check up and see what's going on. I don't know what we've bounced back to. We bounced back to $1.60, so we're definitely not above my DCA point. Now, DCA point, you might be confused. So like $1.40 would be a DCA point, but I'm talking about like the actual dollar cost average. If you buy 50% at $1.90 and you buy 50% at $1.60, you're basically, your DCA is like $1.75. So if we can get back above $1.75, I should be starting to get into profit on KDA. And that's the plan, man. That's the plan. All right, you play by the book. And yeah, like the book doesn't have to work itself out exactly how you said it would, but sometimes it does. And we take advantage. Like I said, $1.40 is the local low on the macro for KDA. As long as that holds, I'll be in KDA. If we break that local low, all right, I'll give it some buffer room, but then if it does continue to dump, I will let it go because there'll be a better price point to buy at. All right, at the moment, we're not out of the woods yet across the board. All right, I'll be very frank with you. All right, I am in longs for various reasons. All right, starting with BTC. All right, I'm kind of going for a hunch here and saying that BTC is a little bit of an overreaction just because of the Luna situation and them having to dump on the BTC market directly. But if we look across the board, Ethereum is still well above most of its macro local lows, specifically 1700, showing generous signs of support off of that. LTC sitting around that $64 mark that we marked out a couple weeks ago, talking about LTC if we did see downside. Algo, all right, Algo hit our take profit of 37 cents and bounced right back up. Now, I did not take profit on Algo at 37 cents. I took profit on Algo around 43 cents, just because once again, I wanted to start to free up margin to move over to inverse perpetual now we're hitting some of these local lows. So, I could have held on to it for a little bit longer, made a little bit more money. And I looked at like the scenario. If I would have held on to the BTC trade till $25,000, I would have only made like about another $200 to the trade. And it was already a $1,800 profit. So yeah, like I'm missing out on a little bit here, but overall, I do feel like we're starting to see signs of a bottom. The only thing that does slightly worry me is BTC needs to get back above 28.8. If it can't do that and hold that local low, we're in some trouble. All right, because that means we probably will see $1,300 on Ethereum, and we'll probably see a lot lower on most coins. Which, you know, obviously me being an inverse perpetual now, I would like to be a bulla. I would like to be a bulla. Now, I don't doubt that there's going to be downside in the future, and today I am going to talk a little bit more about inverse perpetual. Some people asked some questions last night because, you know, Austin, when I got into your group, when, you know, I started watching you, you've been using USDT this entire time. I don't know how to play inverse perpetual. And a similar question was, like, whenever I use inverse perpetual, I seem to make less profit. Now, I'm going to cover that stuff because there's pros and cons. All right, to be a bulla with inverse perpetual is absolutely phenomenal, and to be a bear with inverse perpetual, it's not so much about adding tremendous profit to your account. It's more about maintaining account value while stacking the underlying asset and then waiting for the bounce later on. All right, so we'll kind of get into the dynamics of that, but let's focus on the T real quick. So, like I said, as long as we're holding $1,700 on Ethereum, we should be fine and dandy. We do have the ABC set up. At the moment, I don't have a long position on Ethereum. There's nothing that really called or speak to me on the lower time frames to get into a trade. I guess if we do have another tick to the downside, if we do put in a lower low than 1778, we have that support right underneath us. So that probably would be where I get into my long position, because you can see that's a nice separation of trend here. We can see downtrend, uptrend, and if we put in that one more downtrend, create that lower low, create the ABC, and then show signs of support, we can start ticking to the upside from there, which I'm very much looking forward to. So, you know, I am in longs, but I'm very upfront with the fact, and, you know, preparing myself for the fact that I might get stopped out of them. I'm no stranger to getting stopped out. It's going to happen sometimes. But like I said, it's looking halfway decent. Once again, BTC, it's technically from just a standard BTC point, it's pretty scary. It is. All right, us sitting below these local lows, you know, I don't want to seem biased, because with the same thing with KDA, when we were sitting below that local low, I said, okay, that's a bearish sign. And it is here as well. It is. All right, but we're kind of taking into account the entire macro market, putting a little bit of intuition on the situation we're in. Like I said, I'm giving BTC a little bit of leeway. All right, like I said, don't want to seem biased, but with the whole Luna situation, it seems plausible that put extra pressure on BTC and everybody trying to sell out of all these other coins, like UST and stuff like that, into BTC. I'm sure it wasn't. It's been hectic overall. So once again, remain relaxed, chillaxed, go with the flow. Also wanted to mention the macro markets here, US 100 and the SPY. We do have these amazing ABC setups across the board on the macro markets here. Now, the only thing is, you know, the macro markets look like they need some more downside. So if we're looking at the local low here, the next available place of support for the SPY is 372, and we're pretty close to it. We don't exactly have to touch it. All right, we do have some small support here that could be used. The main thing is we want to see the market get back above these A positions or form a B, C within the C wave to maybe signal when that trend is going to end. And right now on the C wave in particular, I'm sorry to say we don't have that, but that does mean a possibility for the creation of the B wave. All right, so we could see a retest of maybe 12,000, maybe a retest of 410 before we see downside continuation. Maybe not 410 exactly, maybe a little bit lower, maybe like 400, you know, psychological number. But I'm not super bearish. Now, someone pointed out in Discord the other night, I put out a video almost a year to the T about the market crash of epic proportions, and somehow I predicted World War III was going to start, which coincidentally everything's kind of working out the way I said it was. So maybe I'm going against my own thoughts when I say this, but I'm not super bearish at the moment. Now, of course, like I said, we're below local lows. We have yet to find support off of them. There's still more downside to be had, most definitely. But BTC can recover its local low. Maybe we put in a B wave on the macro markets. At that point, maybe we can have some solidity of support, and maybe it's not going to be as detrimental as we might think. So let me just kind of get everything out of the way before we start talking about just bullshit today. Inverse perpetual. What is the difference between inverse perpetual and USDT? USDT, you're holding a stable coin. So therefore, if the market goes up or the market goes down, you're not influenced. There is no pressure on you to make trades. And that is one of the most severe advantages that USDT gives you. That relief from having to make a move in order to keep your account afloat. That is something that is invaluable, and I think is still a reason that if you need to use USDT, go for it. Like, there's no shame. All right, the reason why I am putting in inverse perpetual allows you to make money on the actual portfolio itself as price action is going up, alongside the trade value as well. And when you're getting paid out in Bitcoin, all right, the Bitcoin you're getting paid out in is also gaining value, but the trade itself is also gaining value, and the portfolio itself is also gaining value if we are going to the upside. Now, vice versa, that is also working against you. If we are going to the downside, all right, the only thing that's gaining value is the trade. All right, it's adding BTC to your portfolio, but the BTC it's adding is losing value, and the BTC in the portfolio is losing value. All right, so with shorts, it's not necessarily about making a short that quadruples your portfolio, but maintaining at least maybe net positive by a little bit, or hopefully by a decent amount, but nothing astronomical. The real money is going to be made on the longs. So with us touching macro local lows for the second retest of the cycle, I think it's appropriate, despite there possibly being more downside, to start kind of getting into that mindset of starting to stack bags and then prepare for the next bull cycle. All right, because we have about 700 days exactly, I believe 699 until the next bull cycle. Now, obviously, that's when the halvening starts, and then slowly over the next year or so after that, we will see price action getting more bullish, but it's not going to be that monumental takeoff that we like to see. So we have to start preparing now. All right, this is where the money is made. Okay, it's not during the bull cycle. Now, hopefully you take the money that you make over the course of the bear cycle, stacking your bags, making slight profit here and there, stacking up, and then if you want to go ahead and take a small amount of that and take a challenge portfolio and do what we did last time, be my guest. It's always better to do it with money that you've made over this period of time than sacrifice money from your job. All right, it makes you feel better about if it is a loss, and you have money on the side anyways that's gaining value just to make up for it if you are a failure. There's no such thing as a failure when it comes to trying out something, but hey, there you go. So with inverse perpetual, it does work slightly differently than USDT. So I'm trying to make sure I do this correctly, and if everybody wants me to put out like an actual dedicated video to this, I will, but I feel like it's already out there. So right now my account value is sitting at about 5,000 flat. So you go over here just like normal, you put in $5,000. Now luckily, the formula that I made originally for the Restore calculator was based off of inverse perpetual, so the calculator is actually meant to be used with it. So this is how I have my setup at the moment right now. All right, because I'm all about efficiency. Okay, so on inverse perpetual, and let me actually move my face. I'll make my face smaller. Okay, I'll put it up here. Inverse perpetual, unlike USDT, on USDT, typically we would set up a conditional like $5,000, and we would put in the quantity, and we would have to kind of fat finger in what is appropriate in order to find out what. Okay, I'm on inverse perpetual right now. Let me go to USDT. So I'm just going to tell you the differences. So, $5,000, and then we would have to fat finger in $1,000 to find out what the open long USDT amount would be, and then we would click buy long with the TP/stop loss. And the way that I had my calculator set up, we would use 10%. All right, I like efficiency. So the fact that I can click 5%, 10%, 25%, 50%, 75%, it makes it easy for me to click a button, know exactly that's where my stop loss is supposed to be automatically or mathematically. And I move on from there and I set up the conditional, blah, 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 we're done. Now, the problem with inverse perpetual, all right, there's a part of it that makes it easier and there's a part of it that makes it a little bit harder. Not harder, but just inconvenient. So right here, if we put in $5,000 and we go ahead and we throw in 10% of the portfolio, you can see that buy long number is now told in BTC. So we're now calculating this in USDT. Okay, so this is where the calculator comes in. I want to lose just under 1% of my portfolio if I lose a trade. All right, I'm leaving that 0.10% for like the fees and stuff. So for me, the best way to do this, all right, is because if I go to the buy long button, hopefully you guys can see this. Maybe I can increase the size of it if you guys are on phones. If I hit buy long right here with TP/stop loss, you can see that the numbers that they give you, there is no 10% here. There's a 5%, 15%, 25%, and 50%. So instead of having my calculator set up to use 10% as the risk from margin, because I want the availability to be fast and efficient with setting up stop losses, I just change it to 15%. Now my margin needs to match the 15% in order to equal about 1%. All right. So if I use 10%, I'm only risking 0.6%. If I use 15%, I'm risking 0.9%. So I just kind of fat fingered this in and found out, 6% of my portfolio was margin, and then risking 15% of that margin, all right, allows me to reach that goal of 1% loss. People go, well, if you're using less margin than you were before, you're making less money. No, I'm not. I'm making the same exact amount of money in terms of percentage, right? Because since we're reducing our margin and then increasing our risk, and because of the way that we find out what our leverage is, which is our risk times our stop loss equals our leverage, my leverage now increases from 10 to 15. That's really the only thing that's changed here, all right? And that, the margin is everything like that. And down to the bottom, you can see it gives you contracts to use. All right, so if my account is worth $5,000 and I go ahead like this, it says 4,500 contracts is what I want to use. So 4,500 divided by 15 equals the exact dollar amount that I want my margin to be. Make sense? I'm going a little bit fast today, but it's as plain and simple as it can be. It's actually a lot easier to set up inverse perpetual than it is USDT. A little bit. All right. Like I said, you have to change your calculator a little bit to fit whether or not you want to be, a gunslinger with your stop losses. But overall, pretty good. Like I said, right now we're bullish. So having money in Bitcoin, having money in Ethereum while the market is going up, plus making profit off of the long trades, how can you hate on that? Now, it does put you at a little bit more of a risk. So be safe. Don't over risk. All right. I know like the pep talk that I'm giving seems like, oh, we're about to make so much money. And we are over the course of 700 days, all right, into the future. But still, baby steps, take it slow. Don't kill yourself. Don't kill the account. All right. So hopefully that covered that basis. And because I told somebody that as soon as we were done with the TA, I was going to focus on getting that out of the way. So, and it looks like we're recovering back above 28.8 on BTC, which is a very good sign. Very good sign. As well as that, I have a long on KDA from about $1.50, and I made that trade on the 15-minute time frame the other night, right? Because you can see right here, right, we have a downtrend, uptrend, downtrend, and we're touching a macro local low. All right, if you wait for the setups to be perfect, your chances of win rate increase. Okay, doesn't mean that it will, because obviously when you got a free fall market like we've had the last couple of days, anything can happen. But we waited for the setup. The setup was at a local low. This is how we do it. This is how we do it. We're masters of the trade. Okay, so enough of the hype talk. Sorry, we were watching Tony Robbins compilations in the Discord, making fun of him. So, let me pull the chat out. We'll start talking about bullshit, because that's my favorite part of these. Give me one moment. Okay. All right, so is there any questions about inverse perpetual and like how to set things up? Kite, Luna to 0. Should I long? Don't touch that shit. Don't, like, have you not looked around to your fellow countrymen? All right, go look at Target Hit. Go look at Sato. We were watching them all night long. Everybody that has tried to play Luna the past couple of days has gotten shreked. All right, don't touch it. Why are you so eager to touch something that's dead in the water? There's money to be made on coins that are not going to fail your emotions. All right, Luna's going to leave you devastated. But people go, but look at it. It went boom, boom. One time, it went boom, boom. All right, leave it alone. Leave it alone. Johnny on the spot. That blue username suits you. Sheesh. Sheesh. We got 2 Johnnies with blue usernames now. That's crazy. He said, good morning, Kite, with a kissy face. Oh, stop. Stop. Yeah, I had friends messaging me, and they're like, hey, I bought Luna at 2 cents. And now, like, it's at $2,000, but they locked withdrawals and the ability to exchange it. What do I do? And I'm like, get fricked. That's what you do. That you get fricked. All right, because you let some rich kids convince you to buy up their bag so they can get at least some of their money back. You fell for it, and now you're stuck. In inverse, it doesn't show you how many USD you're using to get it. How do you get around it? Like I said, instead of looking at the direct margin count, you are looking at the unit size. All right, so you have to do a little bit of mental math. Okay, like I said, your leverage divided, or your unit size divided by your leverage equals your margin. So 4,500 divided by 15 equals 300. Make sense? And that's what my margin size is. So right here, right? 4,387 units or contracts equals $310. See, when I entered this trade, this was worth $300. But because the market went up, the margin now is increased because the margin is in BTC. You're making money. I'm sorry, I'm in a really good mood today. It might come off as annoying. It's a Johnny sandwich, you say? Here's the calculator. It'll make it all easy. Like I said, down here in the bottom right, it tells you exactly how many contracts to use. So like if I change this to, 10%, you can see my contracts increase to 7,500. But 6% is where I want it. As the account grows, so does that value. Can you show us how to swap USDT and set an inverse perpetual trade? I did this 24 hours ago to test the waters. So you got to rewind a little bit. I showed you exactly how to set up an inverse perpetual trade and set up the calculator for it. I don't feel like repeating it. I'm sorry. But it's pretty easy. All I did was I went into my account. I went to my USDT. I hit exchange. And then I went to USDT. And then I traded it into BTC. And then, you know, slowly over the course of we were dropping, I would put in 400, 400, 500, 600, 700. Slowly over time. So their exchange on their website is pretty fair. They don't take a whole lot from you because they know that they're going to make money off you from the fees from you trading. So they're not too eager to take it away from you for exchanging assets. But, you know, I got to get that trade framed on a wall somewhere, man. What a monumental trade that was. I'm sad that it's gone, but I'm happy that it happened. Man, that would go down in history. I've had one trade like that was absolutely excellent back from the bull market on my macro account, but that one was excellent. Excellent. And now if the market can get back above 33,000, we are cruising. We are cruising. What's your perspective on the USDT slightly depegging? That doesn't exist. All right. USDT is a fraud, but they're so good at it. All right. It's not an algorithmic stablecoin. All right. The reason why it does that, it looks bad on a chart. All right. That's because it really doesn't ever get depegged. So it looks incredibly bad. All right. We dropped down to 94 cents. All right, when you're on a 2-hour time frame, yeah, you're like, oh my God, it fell off a cliff, bro. It fell off a cliff. All right, but where are the same people with that same energy when it pumped? Are they screaming that it's depegged in a good way? All right. So, I mean, if it looks bad on a chart, that's because it really doesn't move much. So this gigantic wick, yeah, 5%, it sucks. But when you have billions of people that are transferring out of a stable coin into an asset like BTC because it's hitting supports, that's naturally going to happen. All right, the fact that they can keep it up 5 cents, and look, because the market has chilled out, the volume has died down, people are not screaming back into the markets because it's a good buy. 99 cents, 99.7 cents. All right, USDT, that is a depeg, okay, or not USDT, UST. All right. This just happens. I mean, we've seen this happen back here, and it happens to the upside as well, right? When people are selling out of the market in USDT, it depegs to the upside, right? Obviously, people aren't so eager to sell, but they're when we're at all-time highs, but they're eager to sell when we're diving to the downside. Because it happens so fast. I think this screams to me that there's a lot of big players that were in USDT that just bought back in the market. That's what it screams to me. My exit on the BTC long, I don't know. I don't know where that's going to be. All right, I'm assuming, you know, probably somewhere around 45,000, but I got to wait for the next ABC top to show me. If we don't get one, then I keep my long. All right, like I said, with the longs, it's an entirely different story. For me, there's absolutely no pressure in the world for me to take profit on a long. All right, until the market gives me a sign to do so. All right, with the shorts, like I said, once you are past the 50% mark, every single percentage point past that point now starts to lose efficiency. Okay, like I said, if you take a short from a top and you get down to 90%, all right, it's very hard to do it in my mind. But once again, this is the model that I would like to show you, right? Basically, like I said, just losing efficiency. So let's say that for some reason, I was able to get a short from this ABC top right here on Cadena. All right, we had A, we had B, we had C. All right, let's say you took that short position, all right, and I held all the way down to $1.40. All right, that is 94%. So if I was on 10x leverage, my maximum profit would be 940%. All right, but if I took this short and I took profit once we were at $4, all right, I would make 840%. All right, and then this short down to $1.40 would make 640%. So altogether, I'm making around 1,500% versus 940% if I held the first short. Make sense? All right, so for every 1 percentage point, so at $4, a short from $25 would be worth 85% off. And then if we go down to $1.40, it is now worth 95% off. So for the guy up here, $4 to $1.40 is only a 5% difference. But to the person who bought at $4 to $1.40 is a 64% difference. All right, this person lost more than half of their money on this singular downtrend. This person only lost 5% more. Or 10% more, my bad. Make sense? All right, that's why I was kind of screaming from a rooftop that you have to be careful. All right? You have to be careful. So once again, the signs that I'd be looking to exit is the market putting in a significant ABC top. All right, just like we did over here. We had uptrend, downtrend, uptrend. And you can see once we got back below that, that's when the market really dumped. All right here, we had uptrend, downtrend, uptrend. And then on the top of the C wave, we had ABC. All right, I'm looking for the market to give me a sign to hedge. And then once it gives me a new place of confidence to go long from, that's when I can go ahead and exit the long. Because if I'm wrong about the market still continuing up, I can get back into the trade. All right, all this stuff is going to be worked out in real time. So, you know, right now it's theoreticals in terms of like what we will see from the market. The market's going to throw us curveballs. Not always cut in stone and easy, but so far we've been rocking it. We've been rocking it. I've looked around the market and there's a select few of people that had any clue that we were going to see downside. Trader XO, I think is his name. He had the right idea. Johnny Crypto had the right idea. Our group had the right idea. I didn't see much proof from other YouTubers that they were actually short. I heard a lot of noise. I didn't see a lot of proof. I'm talking about we caught the entire thing. I mean, minus a couple percent here at the top. Now, I'm not going to get a big ego about it. I'm just saying I did very well. I want to pat myself on the back because that surprised the hell out of me. All right, I'm over here saying, okay, like we're going to get a retest of the upside once we hit 33K. We're going to get a retest of the upside once we hit 28. Ridiculous. I did not think this was going to be like this. All right, Luna definitely caused that, but shit. Who could have called that? Like, I mean, obviously people were calling the fact that it was unreliable and it can happen. I'm just saying, like, the timing. That's all. How do you set up that trade with BTC, for example, with 5K funds? Willing to lose it all if BT hits 14K? No, so we still have stop losses and everything like that. So for me, yeah, what the hope would be is that we have a short position as we're heading down, all right, to help maintain account value. Now, sometimes, depending on how your account's set up, it's not going to keep you at break even, but it's going to add some to your bags. It's going to help cushion that loss. All right. The whole point with inverse perpetual with shorts is to cushion losses or at least maintain value, not necessarily grow value, but you are growing value in terms of the amount of coins that you're holding, which is obviously what you want from the bear market. And then on the longs, you make out like a bandit. All right. So that's the whole purpose. Why have I long 27,600? So like I said, a little bit of intuition coming from the fact that, okay, Ethereum was able to find support off of 1700, which one is one of its macro local lows. Most of the other coins that I was looking at were hitting macro local lows. And I said, okay, well, BTC was heavily influenced by this Luna dump. All right, so there was some extra pressure that was put on BTC. So obviously, we have to maintain 28,800. If we can't, this is just going to be a rejection and we're going to see further downside. I'm okay with that. All right, I'm not freaking out. I'm not trying to sell my bags immediately. All right, because look at the percentage difference. All right, the 200 daily, well, the 50 weekly EMA is sitting at about $25,000, $26,000. So if we dump down, what? 13%? All right. Now, somewhere in that, if I need to, if there is a short position to be had, I'll take it. All right, because if we're below a macro local low and the market throws me a short position and everybody else is bullas, I'll take the short position. At the moment, there's nothing to, I can't predict the future. I can't do anything about it. The reason why I'm long right now is because on the smaller time frames, we had this ABC right here, right? And once we got back above 27,700, I went long, right? Now, that's in conjunction, hoping that we hold 28,942. Now, I can see right here, we do have like an A, a B, and a C about to be made. We will see how this works itself out. But you can also see what pattern did we just draw right there. Isn't that friend? I didn't even notice that until it was fully drawn. Perfect. Love to see it. And guys, my heart rate is down to 80 beats a minute. Who's the man? Who's the man? Me. I'm the man. Now let's take a gigantic swig of Red Bull. Kite, you've used a lot of strategies in the past. For how long would you test a strategy before deciding what's good or bad? A very long time. All right. If you're going to try out a strategy, you have to give it a lot of time because you have to see what the efficacy of it is. Is it a bad time for the strategy if you're not winning, or, you know, whatever it might be? Now, me, like, I'm more of a hands-on person. So, like, I tried tracking the data for like 2 months, and yeah, I did well. All right, I had 22% win, 22% win chance with the 0.441 method, and I think the average R&R was like an 8.59. So, statistically, it works. Now, it might have increased in one market, decreased in another. The average might have changed, but who knows? For me, that's why I do challenge portfolios to test it out. If the account goes bust, I know there's something wrong in the whole situation. So I change it up. I logically think about what I need to do better, and this was proof. All right, back when we were playing on the 5-minute time frame, doing stupid stuff, the account went bust. As we changed to a larger time frame, added patience, you know, gained a little bit of IQ points along the way, we can see what kind of benefit that had on the account. Thoughts on sushi? I ain't got none, man. That thing's, I can't believe how far it has come down. All right, like I said, I really believed in the project when I was back in it, but after they pretty much just let it go. So they had the bento box coming out. I was very excited, but that has to do with like algorithmic coins, arbitrage. So ain't gonna happen anymore. So I really don't care about it now. I'm gonna die in a fire. All right, we're focused on the macro here. I like the ABC strategy a lot, but when okay, so that's such a common thing that people say, and I don't understand that thought process whatsoever, right? I mean, it's very easy to see, okay, I have uptrend, I have downtrend. Now, it's not about understanding whether or not it's going to actually make the C wave, right? It's about taking the chance. All right, so like right here, all right, I had an A, I had a B, all right? The C wave did not exist yet at all. The only thing that I had was everything from this trend line left, okay? So I go, okay, we have a big uptrend into a big downtrend, which has not put in a lower low yet, so there is no ABC on this side. But I go, okay, we have an ABC right here, right? And the whole thing is like, you don't have to predict it. You can just wait for it. So once we have a downtrend, once we have an uptrend, once we have a downtrend, and it comes back above this line, that completes it. That's an ABC. I can go, okay, I'm going to hold this long, and I'm going to see if this is going to turn into a big A, a big B, and a big C. And it did. All right, it's not about understanding like, oh, it's definitely going to do that. It's about taking your chances, looking at the risk versus reward, and playing out the whole system. All right, and it is subjective. All right, if it wasn't subjective, I would be put out of business. All right, if this was something that everybody had like a written handbook and they could do it exactly, all right, and they could make no mistakes, I would be screwed. All right, what sets me apart is the fact that I can think through things logically without emotions, and because I've been doing it long enough, I can spot these trends with my eyeballs in like 2 seconds. All right, so the whole thing is if you do it long enough, you'll be able to do that too. You don't want something to be just like super easy, right? I do think this is probably one of the easiest methods out there, hands down, but it does take a shift in your mindset and how you see the market, right? If there wasn't that, then there would be no edge. And if there's no edge, there's no trades, right? This money is whole profit. I mean, this whole market is about making profit. If I didn't have an edge over people, there would be no profit. But it's like Trader Tom was telling a story of like this trading group that was professionals, and goes, you know, they had a quote where it was like, we could put our trading rules on the front page of the New York Times and people still couldn't do it, right? Because they put limitations on themselves. They don't, it's just a whole different concept of thinking. Just takes a little bit of visual IQ. Like right here, we've been calling this for like a month at least, right? We were going, okay, we have a huge downtrend right here. We have a huge uptrend right here. And we don't have to have this spike to the downside to go, okay, well, this is, you know, possibly an A, this is possibly a B, and we're possibly going to see a C. And then, you know, we can obviously take a macro trade once it gets back above 32,800. I'm still in my soul and ape short since we will be going back down. Okay. What's up, Kite? I'm late. Did you get out of your short on BTC? Yep. The big short is now over. Hate to see it. So I tell you what, it's so much fun to be in the market, be in the decent trade. Yeah, we got to be vigilant, looking for hedge trades, preparing alternative plans for how things are going to work out. But just being in a decent trade where you don't have to worry. You know, I was able to get decent sleep, although like my sleep schedule wasn't good, but I was able to get like full nights of sleep consecutively, which, you know, last night was not one of them. We still got negative funding rate, so that's kind of helping a little bit pump price action back up. Not too much, but. Will I do an ABC on 8? Okay, I'll look and see if they got something, but. There's jack shit on the macro for you. But, I can't say shit. There's nothing. Well, I can say, like, okay, here's a good point. All right, Seb, look at what's happening right now. All right, there is no ABC on my screen. All right, to me, that's apparent. But there is an A and there is a B. Okay, so it does not necessarily mean that price action will come back down. But since we only have a downtrend that broke into an uptrend, we could see one more lower low on Ape. Now, I think Ape is a hot, steaming pile of shit. So I don't think that there is, I think there's going to be a lower low, and I think that lower low is garbage. That's where it's going. That's a hot take. All right. I don't care if you like it. That's what I think. All right. It's a pile of poop. All right. If it's still here in 5 years and it's doing well, I'll eat my words. But come on, guys. This thing came out like, what, a month ago? Jesus. Last night was brutal. Tired as fuck. It was fun. It was fun. Do exchanges automatically close your trade when you're in profit? Is enough the leverage reaches zero core? Bybit has never ever touched my trades ever. They don't change anything about them. KuCoin can suck it if they touch your trades. Just means that they didn't have enough liquidity and they got screwed, and they screwed you because of that. Nothing right now. There is no real short setups, maybe on the smaller time frames, but there's nothing too spectacular. Like I said, right now, BTC back above the macro local low. Ethereum finds support off the macro local low. KDA found support off the macro local low. LTC found support off the macro local low. Oh, and also the index has a fat ABC on it, which is it back above? Close to it. If the index can get back above 165,000, we have a gigantic ABC on the entire market. You love to see it. So we'll see how it goes. I really don't care about XRP. I know it's included in this, so it kind of does skew the results here. But and as well as that, the SPY. It's getting close to a macro local low, or it can get back above this one. Depends on what happens. My bad. That was the US 100. The SPY is definitely getting close to support. Support and resistance isn't a direct line, but we can say like this is kind of like the net area that it would like to find support. Obviously, until we get back above these A positions, I'm not like bullish on the market. But I am saying that there could be upside for a retest possibly before maybe a slightly lower low. Who knows? Is that just something you have in consideration? That a coin is pumping and you don't want to short too hard? Especially, so a really good example of this was ZIL. So ZIL, I don't know much about it, so I'm going to call it a shitcoin. All right. Like I said, I know it's probably not the best opinion to have because I don't know what something is. I call it a shitcoin, but it's an altcoin that I have never heard before. All right, so to me, it's a shitcoin. All right, but it had a massive pump to the upside that was monumental. All right, one thing that can happen is when you have a coin like ZIL that nobody gives a frick about, and then all of a sudden it starts pumping. All right, what do people initially do? They go, okay, this thing's a shitcoin. I'm going to short it. But everybody else was having that same idea as well. And that was reflected in the funding rate. ZIL had a funding rate phenomenal that I have never seen before in my life. It was -3. Right? Typically, like right now, BTC, a lot of people are bearish on the market. It's -0.04. So to see -3 on there was crazy. What that means is that there's so many people shorting ZIL at that moment in time that if somebody was to just kind of step in with a nice long position or a gigantic market buy and they just push price action up 2%, they stop out billions of dollars, well, not billions of dollars, maybe millions of dollars in a low liquidity market, and it causes, when you get stopped out or liquidated from a short, you're basically buying the asset back at a higher price point. Therefore, all of those shorts that got liquidated caused this pump. So they stop out some shorts here, and the shorts have to buy back into the market to sell. So it stops out the shorts up here, and it keeps going up like a ladder. That's what caused ZIL to go crazy. So when something is pumping insanely hard, you do have to be careful, because that is something that can happen. It's just, with crypto, it's not, yes, there's fundamentals in terms of like if a coin is good or bad from like a white paper standpoint. But you have to realize we're playing a video game here. This is like me versus you. This is a FPS shooter that's played on a graph chart, right? Whoever has the best skill walks away with the money. Now, obviously, if you look at it from a long-term investing standpoint, you're not playing that video game, but we are. So you do have to kind of, now most importantly, when I say stuff like that, I'm not talking about it in terms of an us versus them perspective. There is no frickin' market maker that's trying to take your lunch money, okay? You're getting caught up in crossfire between these big guys. They're 2 steps ahead of everybody else, but it doesn't mean that they have to be. You can think smart. You can do things to help mitigate your losses or work with these big guys. See what I'm saying? It's not us versus them mentality. All right, the big guys are after people that have big money. They don't care about you. They don't care about you. What is psychology of ABC? If you look at it from this perspective, it's a very simple ideology. Okay, market has severe confidence getting up to this price point of 45,949. All right, from there, it had a big dump because the market lost confidence. Market found support, it regained confidence. Now we are going to go back up and retest 45,949. The market, because of the second retest, had a little bit more confidence. But once we came back below, it signals, okay, the market really doesn't want to push past this point. It's time to bail. Now, obviously, you have people that are on the opposite side of that spectrum who go, I think this is a breakout. I think this is a breakout. And then they add liquidity. And like I said, when you have a whole bunch of people taking a long breakout trade and they all get liquidated, what happens? Whoop. They have to sell back into the market to get out of their trade. ANC has a -3 funding rate right now. Good call on that one. Let's check it out. Now, this is a little bit different of a situation. I'm going to say that right now. Because the -3 funding rate was coming while we were in the midst of a pump. I'm not quite sure if it's going to work the same way with the midst of a dump. But, hey, look at this. You guys want to be degenerates? You guys want to be market makers? All right, trust me when I say this. I don't think this is going to work, but if we do happen to get back above 12.9 cents, maybe we'll throw something in there. Yeah, let's load it up. We'll do like what? $25. 12 point. We'll do 13 cents flat. And what do we got? Let me take this off across. $0.13. And $2,000. Well, what price point did they close your trade at, because if Luna was about to hit 0, they might have closed your trade because if you're holding a short and it hits 0, your short is also worth 0. I hope you know that. So if like Luna was hitting 2 cents, they might have prematurely closed your trade because then you won't even have a trade. Is that what happened? And say it was a Ponzi scheme? Oh, more reason for it to have a stupid pump that comes out of nowhere for people to freak out about. Like I said, I'm using what, $25? I don't have any stake in this game. It's just because of the funding, right? If we can get back above that support, I'm sure that's where a lot of people maybe took some breakout shorts from. The only problem seems to be like this is a incredibly low liquidity market, so we'll see what happens. But I do have to get going here, guys, because I'm going on Ryan's stream at 8:30. So he's starting to send me over the links. So I'm going to start signing off. And if you guys want to follow me over there, you guys can. But I'm going to start saying goodbye now. That way I can go help him get everything set up. Pick a song for the outro. Some a little quick, some a little sweet. I'll play I Want You Back by Hobo Johnson. But, alright guys, I appreciate your time. I will see you on Ryan's stream in like 5 seconds. Well, like 20 minutes. But, alright guys, let's do the thing. Bye!
Stop, fish. I want you back! That's the worst thing I could say. Coldly lying on the couch like, oh, this couch could be my grave. I want to slap! That would make me quite upset, but if my brain came out my ear, then I guess that's what I get. I need a nap! And to see where all my edges are, I need to be alone before I could even hope to start. Spit on me again, that's impressive, about 8 feet apart. But if we laugh again, that will tear my mental health apart. Fuck! How come everything is pain? Every time I was happy, it surely went away. But babe, they gotta work all day for very little pay. I think that's fucked! And sadly, so am I. If I ever have kids, I hope they can't see out their eyes. When I imagine my kids, they kind of look like you. And I am sorry, and that's true. I think I'm fucked. I really think I'm fucked. I made $1 million. But then I had to spend it all on therapy. I learned the deadly lesson that money doesn't help my depression. And you're stuck with your brain no matter how much you make. And you will surely find new problems. Naive is the thought to think money is ought to be the thing that always solves them. I am fucked. I think I'm fucked. I think I'm fucked. I think I'm fucked. we become obsessed with straight staring at phones. My brain has now become unable to cope. The techniques and the methods that they use on my brain are extremely effective and far too great. And now I'm just laying here dead on my couch. Facebook and Google have their tubes in my mouth, and as they generously feed me my ads for the day, for the week, for the month, I think